Is gold the barbarous relic that we've been told that it is? Are the Keynesians right? Or is gold really a solid investment and should be used in conjunction with many other assets in your portfolio? I'll go through a few things today that represent to me real economic indicators that gold is a solid buy. Now, of course, I will make this disclaimer right away that you should not, I repeat, not put all your money into one single asset. Even if that's gold, even if that's silver, because nothing is bulletproof. Let's go on very quickly. Gold euphoria won't last with Yellen's rally fading commodities. So what they're talking about here is that gold was just on a little rally because of what happened in Iraq, because of interest rates being so low. This is just a temporary rise. Don't worry about it. Things are going to change. That's what they're saying. That's the general response in the media. That's the financial advisors. This is the kind of drivel that they are projecting onto us. But let's take a look at a few factors. Central bank gold agreement. So they're making this agreement here. A bunch of the countries are going to come together and they're really going to say, they've said that they will basically not sell much of their gold for the next few years. So they're going to say, let's stick with what we have and perhaps continue on our buying spree. As I'll show you, they've been continuously buying up gold, these central banks around the world, different countries. This isn't just the West. This is actually more likely in the emerging economies that really this is occurring, and that is signaling some very good prospects. I'll show you that in a second here. But gold buyers and sellers to explore reform of London gold fix, and they are saying that the price is a manipulation. I'll get to that in a second. Just let me read this. Representatives of bullion banks, exchange traded funds, refiners, exchanges, industry bodies, central banks, and miners to meet to discuss the changes. They are fed up. They're tired of all this fake price of the gold because they know they have to go in, they have to mine. It takes so much money to pull that gold out, and then when they do, if they do, the price that it's valued at currently is not real. So they are being basically essentially screwed over in this case here, because the prices are not based on supply and demand. Many other commodities suffer the same thing, but none worse than gold, and that is for very intentional purposes. The talks will increase external pressure on the four banks that set the gold fix to reform the process amid concerns that is open manipulation. That is what happens. They manipulate this price. They've been caught doing it in so many instances, and we still have to talk about it like as if it's sort of, maybe this is happening, maybe it's a conspiracy here to keep the gold price down. They've been doing this. They've been manipulating all of the markets, not just the gold, not just the silver, not just commodities. This is every single market is manipulated in one way or another. Let's go on very quickly. This is the reserves for all the countries around the world here, and it's claiming that the US has over 8,000 tons, that they are number one. Anybody knows that this is such a false number. They couldn't even give up their gold back to Germany when they asked, and so other countries have been asking for their gold, and it takes them forever. Who knows where they're getting this gold from? It's probably tungsten for all we know, but regardless, this is the case. The numbers they're providing us are not real. Let's go on quickly. China obviously is the big talk of the town for when it comes to gold. I'll go through a few points here. From the 1990s onward, the government makes it easier to buy gold. This is where we really start that surge in the gold buying for China. 10 years of rapid growth in the middle class affluence. The middle class expanded greatly in China. We saw that it's happening still today. And then rising real income, something that I talk about in my book, how rising incomes in emerging economies such as China represent a very big difference. When you have 1% of the people in China doing something, doing everything in sync, that 1% represents a huge population of people, and that's how this occurred here. So basically, in 2013, China became the world's #1 market for gold. They actually surpassed India here, and that is huge news. They were over 1,000 tons in consumption that they did throughout 2013. That is huge. That is so big, and it makes a big difference for the price of gold. That's the physical metal. I talked about this in my recent interview with SGT Report, and I'll talk about it right now. And basically, it's saying that this is the reality. You have real supply and demand. The demand for physical metals have not decreased. It is always and always has been the ETFs and the exchange, all the paper markets essentially, that are being bought and sold. It is just the physical metals that are consistently being bought. That's all that matters to you and I, because we're worried about protecting and preserving our wealth, and gold and silver will do that. Now, once again, I'll make that disclaimer. Do not put all your eggs into one basket, and understand that nothing is bulletproof. I hope you like this information. If you do, please give me a thumbs up. I want to thank all of the new subscribers that are on here, and everyone that came over from the SGT Report. I want to say hello to you, and hopefully you'll join me on here for some conversation, and we can get to some very deep intel. If you want more intel, it's best to be a Money GPS insider. In order to do that, it's free. You just go to themoneygps.com. At the bottom, you fill in your email address, and you get short, concise emails from me occasionally with some great information that is basically an extension of that which I've done in my book. Take care.